Good morning, everyone. I hope you can all hear me. Welcome to today's session. This is the first time that we are doing it. So this is a live market analysis. You can kickstart your day. The point is to kickstart your day by discovering trading opportunities in the market. So I would like to take this opportunity to welcome all of you to this session and also to thank Malonza FX for organizing this session. I'm pretty sure he's in the room. We can make this as interactive as possible, as much as we can. That is really, what trading is all about, interaction. In the financial marketplace, it's buyers and sellers that are interacting with each other. So very, very quickly, let's go straight to it and see what opportunities do we have in the financial marketplace, trading opportunities that we have. So better understanding also of what has been happening, what has been going on in the financial markets, what has been causing shifts in demand and supply, the information that has been driving the markets. That's the first point that we need to know or to start with. What is making things move, what is moving the markets, or what moved the markets. Very simple to understand what moves the market or what is making the markets move. Simply, we're going to do that by looking at the economic calendar. And yesterday we had some reports coming out which affected demand and supply, and market participants were watching for retail sales data, initial jobless claims, core retail sales. You can see all this data came out very positive, including jobless claims. That is the number of people who are seeking unemployment insurance. So that number came down. That is positive for the economy, positive for the country. Core retail sales also came in very positive. Besides from only manufacturing data, the rest came out positive. And how has this made the dollar trade? So we look at how the dollar has essentially been trading. Okay, shit. There is no one here. Morning, nice to have all of you guys here. Morning. This is the first time we're doing this, so apologies. There has been a bit of a delay, but we can still carry on. We can still start this. So morning, nice to have all of you guys here. In fact, I had already started only to realize that most of you guys hamko ndani, but sasa mko ndani, karibu Mary, Victor, Peter, Jerry, karibu Joseph. And I hope you can all hear me clearly. My name is Dennis MWENGA. Okay. My name is Dennis MWENGA, and before we proceed further, let me just introduce myself, and also would like to thank Peter. Would like to thank Malonza for organizing this. Malonza FX for organizing this. We work together. Yes. So feel free to ask any questions that you might have. Feel free to ask any questions that you might have.
Sasa sioni vizuri hapa.
Feel free to ask any questions that you have. Anyway, the purpose of this meeting, I'd say, is as it has been stated, live analysis, live market analysis, discovering opportunities. We shall try to do this on a daily basis. I hope you learn something from it, or you endeavor to try to learn something from what we will be doing here. So I hope everyone can see my screen clearly.
Sasa ndio wenye wako.
And can hear me as well. So let me see. Okay. Numbers coming in, guys are coming in. Good. For those ones who are here. Yeah, please take a moment to take note that the trading is a good way of course, participating in the financial markets, trying to get some points here and there, but of course, it comes with risk. So the important thing is you define your risk. Now, I am Dennis, market analyst and trainer here at HFM. And I've been active in the financial industry for quite some time. My mission is simply to help you learn so that you can earn. Chartered market technician, my professional designations. I'm also, and I also have learned order flow as a way of operating in the financial markets, as a method of trading, I guess, in the financial markets.
Nilimwambia peleke kwa Rufen. Nitamwambia tena peleke. Mwambie peleke, nitamlipia.
Yes. So as I was saying earlier, my designation, Chartered Market Technician, order flow, and also a member of the Chartered Institute of Securities and Investments. But this does not mean that now to become a trader, you need all that, not necessarily. So now, again, I repeat, if you have any questions, please feel free to ask those questions. So let's just jump straight to the financial markets and discover trading opportunities and have some fun. Let's, the markets are fun. I love the financial markets. I'm always actively engaged in the financial markets. So one of the ways to become consistent in this business of trading, you have to consistently engage yourselves in the financial markets. Look at the markets every time. And let's start by looking at data, information, what drives prices, okay? What drives price? Simply what drives price is supply and demand, okay? Supply and demand, very simple. I like keeping it simple, so I'm going to keep it very, very simple. Supply and demand. So as of yesterday, we had retail sales in the US. Okay, these are the number of retail sales information or data. We had GDP in the United Kingdom. Jobless claims, also the number of people who have been seeking unemployment insurance. You can see the number went down. So few people are seeking for unemployment insurance. Retail sales, this means that consumers are spending. The forecast was 0.1, but the actual number came at 0.4. And retail sales month on month also beat forecast. So that created a demand for the dollar. Okay, that created a demand for the dollar. So if we look at today we don't have any high impact news releases that have been scheduled. But next week is going to be an interesting week. So as of this morning, how is the United States dollar trading? As of this morning, how is the US dollar trading? So I hope you guys can see my screen. As of this morning, how the United States dollar is trading, as you can see, The dollar this morning strengthened, okay? The dollar strengthened. That was yesterday. If you look at yesterday's trading, this bar here, this candle here, this was yesterday's. When you look at the 1 hour time frame, look at the 1 hour time frame, this was yesterday's trading. You can see how the dollar index jumped up thanks to that positive economic report. Jumped up all the way to these key levels of resistance. Oops. Oops. So jumped up to these key levels of resistance that you're looking at right there. Well, let me just have my terminal right here. Have any positions running for now anyway. Okay, so yes, jumped up due to the positive economic reports that came out, created a demand for the dollar, pushing the dollar index price up. Now, you know, what is the dollar index? What is the dollar index? Anyone who can tell us what the dollar index is? Okay. I hope my screen is still visible. Oh yeah, it is. It is. What's the dollar index? What's the dollar index? Why look at the dollar index? Why look at the dollar index? Hello. The dollar index. So when you hear that index, so what the dollar index is, it basically measures the strength. So the dollar index, oops, I can see guys are still coming in. Let me see, guys are still coming in the room. Good. What the dollar index does, the dollar index, it's used by traders to compare the strength of the dollar against other major currencies, okay? The G7 currencies, the yen, the euro, the British pound, the Swiss franc, mention all those currency pairs. So when you look at how the dollar index is trading, it's basically indicating to you how is the strength or weakness of the dollar relative to other currencies. So it gives you a big picture view, okay, of how the dollar is doing relative to other currencies. So it's the dollar index, essentially it composes of a basket of currencies compared to the United States dollar. So if the dollar index is largely selling off, for example, largely declining, that essentially means that the dollar is weak against most major currencies. Not all, but most major currencies. So it gives you a bigger picture view, okay? That is essentially what the dollar index does, and that is why we are starting with the dollar index. So looking at the dollar index, we can see yesterday prices bounced up thanks to the positive economic report, breaking above 102.46, stretching all the way to 103 flat. That is where we have that 50% fib level right there at 50%, slightly above 103, 103.05. Right now, this morning came down this morning trading at 102, from 103 now to 102.75. Okay, after yesterday's jump up. But the overall picture of how the dollar is going to trade, the dollar index is in a major downtrend, as you guys can see. So this downtrend has been caused, what has caused this downtrend is because inflation in the US has been cooling down. And so the big boys, that is the central bank of the United States, they are looking to cut the cost of borrowing. Okay, that is interest rate, the cost of borrowing. They are looking to cut the cost of borrowing come September. Okay, in September. So that creates a negative sentiment for the dollar. So that is why you see the overall trend of the dollar has been a downtrend. Now, any information that is coming up that is boosting the dollar, okay, it's just going to have a limited upside potential. That is why we see the dollar index went up, came to this level of resistance, and now it has come back. It has come back down. Okay, it has come back down now, as you guys can see. So the dollar gains strength after very robust retail sales and lower jobless claims. However, softer than expected inflation data maintains expectations of an interest rate cut. So any upside potential gets limited. So now, trading the dollar index, basically, we have had encountered resistance at 103 here, where we have the 50% level there, 103.05. Key level of resistance came back down, and now we have it trading below 102.79. Okay, 102.79 also, we have it trading at 102.75. That is below resistance at 102.79. So looking at it that way, if someone is looking to, for example, go long, sell the dollar index, someone is looking to do that, that should be your potential entry points, and having exits or stop losses above 38.2 and also or above the 50% level, that is at 103.07. If any information comes out and the dollar index becomes strong, we should see it breaking above resistance at 38.2, looking to target around 103, 103.05, breaking above 38.2%, that is at 102.80, and driving up all the way to that level. So near-term target to the upside is 103.07 to the upside, that is, and all the way to 103.33. So this is the near-term target here. This is the longer-term target. And to the downside, near-term target at 23.6%. That is at 102.48. And also, again, we have finally at 1101. Okay, if the dollar index sell-off is going to continue, or price otherwise might continue remaining in this consolidation or range between this 0.0%, 102 flat and 103. Okay, another thing also that is interesting to observe is crude oil. When you look at WTI crude oil, how crude oil was trading. So prices of crude oil yesterday went below $77 per barrel. So I want to see oil. This is oil. Okay. So this is crude oil. As you can see, yesterday we are saying prices went 77, below 77, pressured by China's economic concern and rising US inventories. So we're saying oil got pressured, but generally oil has been moving up. As you can see, generally oil has been moving up. That is because of tensions in the Middle East and also positive US economic data. So positive US economic data indicated that there is demand for crude oil. You know, when the economy is positive, when the economy is doing well, there is usually what? A demand for energy. So that drives the prices of oil up. So you can see oil went up, then came at this level here of support. It is slightly trading above that level of support at 75.90. Okay, 75.90. Around there. This is where oil encountered support. We have resistance at 77 flat. So if this positive sentiment continues, we should see crude oil breaking above that resistance level at 77.05. So breaking above 77.05, an ideal stop loss point will be at 76.87. Okay, if oil is going to continue selling off, we should see it finding support again at 75.93. That's where we have that critical level. So at this point where crude oil is trading, it's either we go up, okay, it's either the market goes up, breaking above 77.09. That is that key resistance here at 23.6 fib level, breaking above that resistance. And if it breaks above that resistance, below the resistance, that provides us with a good opportunity to have a low risk entry. Okay, a low risk entry where we can have a nice tight stop loss below that level of support, because if price breaks below above 23.6, it becomes a level of support. Now if price continues selling off, look at support at 38.2. See that 38.2 area. That is where support is. Okay, so that can be a target. If someone is going short on crude oil this morning, 38.2 can be a target, and stop loss at above 23.6 right there, having it at 77.11. That can be your level there to watch out for. Level of I would say a level of resistance, you know. So in trading, you're looking for a low risk entry. Okay guys, a low risk entry. So a low risk entry is a point where you can have a nice stop loss, manage to handle the risk quite well, and trade in a way that you are more confident and relaxed. Okay, so let's look at other currencies also to see where we are finding low risk entries. Let's look at the euro dollar. Very, very interesting how the euro dollar has also been trading. So overall, if we look at the euro dollar overall, okay, remember guys, feel free to ask any questions, any analysis that you need. Also, if you need us to analyze something, also feel free to make a request of what we're going to analyze. So overall, euro dollar overall. So overall, if you look at the euro dollar overall, we once traded at this low at 106. That's 1.06. I'll just say 106. Moved up to 107, and currently we are trading at 109. So from 106, 107. In other words, so what we have 107, 106, 107, 108, and currently 109. In other words, the trend has been moving upwards. Okay, so there has been what? There has been demand. Okay, the reason why there has been demand is because inflation in Europe has started ticking a little bit higher. Okay, the inflation target for the central bank is usually 2%, but as of last month, as of July, inflation has ticked up to 2.2%. And that has caused that upward movement in the what? The euro. And remember, in the United States, inflation is slowing down. Okay, inflation is slowing down, and the central bank is looking to decrease the cost of borrowing come September, in September. On the other hand, in Europe, inflation is going up. Okay, so you are trading two countries here. Okay, so you are looking at how is the economic data in Europe looking like relative to the economic data in the United States. So that's a way of conducting what we call fundamental analysis. You can join us in our trainings, in our classes. We usually learn a lot about fundamental analysis, but in a very simple way, okay? Not in a very complicated way, very simple, straight to understand. Like you see the way I have analyzed very quickly. So we know why the euro is going up. So we want to look for opportunities to see whether we can find opportunities to join that move up. Okay, so to join that move up. So let's see. So let's see, for example, if we are going to look at the euro, for instance. So we have key levels to look at. You see, as of yesterday. So as of yesterday, the euro came down very fast. Okay, the euro came down very fast. That is, the dollar strengthened. That made the euro come down very, very fast because the dollar strengthened. Remember, the dollar strengthened because of positive economic data, retail sales, as we had seen earlier. But this move down seems to be limited. Okay, seems to be limited because overall inflation in Europe is moving up compared to inflation in the United States, which is moving down. So that bigger picture view supports the what? Supports the euro, the uptrend in the euro. So now, looking at how it is trading this morning, the London session has just begun, guys. 4 minutes ago, that's when the London session began at 10. But anyway, looking at how euro dollar is trading this morning, we can see encountering resistance at 38.2% level, key support at 50% level. That is key support here at 109, 1.0938, 1.09, not 38, sorry, 1.09. 63. I'll just say 109.63. Support at 109.63. Resistance currently right now at 109.85. So for a bullish move to the upside, this should be the short-term target here at around 110 flat. Okay, 110 flat. That should be the near-term bullish. Target if someone is to go bullish on Euro USD, if someone is to go long, and of course have a nice stop loss probably below the 50% level. That should be a stop loss of around 20 pips. Okay, when you have a stop loss there, that's a stop loss of around 20 pips. The first near-term target at around 22 pips, 20 pips, even more. And then we have that long-term target up here at 110.49. 110.49, 110.50, 110.50, another one at 110 flat, 110.50. Those are targets to the upside, and targets to the downside at 109.46, and here yesterday's low at around 109.48. Okay. So this provides us with a region whereby we can get a low risk entry. As I had said earlier on, a low risk entry, when you talk about a low risk entry, that simply means an entry which you can determine your risk well, like I want to risk 20 pips on this particular trade, calculate how much is that 20 pips. That means you are risking how much on that trade, and how much will my reward be if I'm going to let price move all the way to 110 flat, for instance. That is 20 pips up, or even more than 20 pips up, that is 50 pips up. So we'll see if the dollar will continue selling off. That should encourage the euro to continue being bullish. Okay, so I can see we have some questions. So finally, guys, let us look at gold also. I understand many people do trade gold, quite a volatile asset. So overall, looking at the bigger picture, gold has been quite strong, quite bullish. As you can see, even when you look at the daily time frame right there, gold has been very, very bullish. Okay, when you look at the overall picture, very bullish, moving to the upside. That's how gold has been trading. As you can see, very bullish, but it has reached a point whereby gold is in a sideways trend or has been consolidating between 24.78 and 23.51. Okay, so one of the reasons that gold trades in a bullish manner is because of inflation again. Okay, it's considered as a safe haven investment in times of inflation. So with gold, if the central banks are looking to increase the cost of borrowing, that's usually negative for gold, okay, and positive for the dollar. If the central banks are looking to cut the cost of borrowing, that's usually positive for gold. And that is, you can see that's how gold has essentially been trading from an economic data perspective. Another thing that supports the prices of gold is geopolitical tensions, okay? Fears of war or political turmoil. As of now, we have a lot of fighting going on in the Middle East, that is in Gaza, between Gaza and Palestine and Israel, what is going on there in the Middle East. And if those tensions fail to cool down, we should also see that supporting gold prices. As of now, the tensions have cooled down slightly. They have just slightly cooled down, okay? And since they have slightly cooled down, okay, and guys, those guys, please mute your microphone if you have your microphone on. Kindly, I beseech you to mute your microphone so that other guys can listen in clearly. So as I was saying earlier, tensions in the Middle East are, there are negotiations that are currently ongoing. The other, the Hamas side is saying, they don't want those negotiations anymore. Iran wants to revenge against Israel for assassinating some of its, prominent, leaders who basically support the movements in Gaza. It's all that politics. So since there is that uncertainty, we have seen gold prices consolidating. Uncertainty as to whether will Iran attack Israel, for example. Will Israel, will the current calm situation turn into a storm? There is that geopolitical angle. And also, again, as I said earlier, and I repeat myself on this, there is the angle of interest rates, okay? Inflation in the US is cooling down. That means the central bank is looking to reduce interest rates in September, and that is a boost for gold. Now, it is just a matter of waiting to see what is the next move that will make gold start trending strongly again on a long-term basis. On a short-term basis, if we look at gold on a short-term basis, for example, gold, you can see this is the consolidation that has been happening to gold, and we had this very nice move up. And so if I would wish to trade gold, for instance, I'm looking at the long-term analysis, the one that I was mentioning about, and I'm looking to buy gold. Probably I would want to buy gold when it comes to 38.2% level and 50% level. That is at around 24.42 and 24.26, and as well as 24.36. Essentially a point whereby if I enter, I'll have a reasonable place to put my stop loss. If I enter here, I have a reasonable place to put my stop loss here. If I enter here, I have a reasonable point to put my stop loss around here. So basically, looking to enter at points whereby I can manage my risk effectively. You see where you can manage your risk effectively, guys. You are looking to manage risk. Now, if I decide to go long on gold right now, I have an opportunity around 24. We have it at 24.53 right there. And I can have my stop loss below that 23.6% level. Maybe I have my stop loss at 24.40, thereabouts, around there, 24.40, having a stop loss there, or below the 38.2% level, or a nice tight stop loss at 24, that is what, 24.49, a nice stop loss there if I were to go long. If I were to go short on gold, but to sell gold, of course, wait for price to break below 24.51, 24.50, waiting for price to break below that level. If price breaks below that level, that is provides a good shorting opportunity for gold, and having a stop loss slightly above yesterday's high, that is at 24.71. But that will be a huge stop loss. One can have a stop loss just below 24.52 if you are going to sell gold below 24.52, because 24.52 is a key level there. That's a key level. Okay, that's a key level of support. If price breaks below that key level of support, then having a stop loss above that key level of support that price has, that price has broken, will not be an unreasonable place to have a stop loss. So that's gold. I can see there are some questions coming in. That's good. There's some questions coming in. Please remember, if you want more of this information or analysis, maybe one-on-one analysis, make sure that you register. You can contact us. You can contact Malonza. He'll help you with it also. Another thing, let's see. Let's look at the questions. Let's look at the questions first. Let's see the questions or the comments and additions too. Okay. Okay. There is noise in my background. Sorry about that. Euro USD. We have looked at the Euro USD analysis. We're going to look at the Euro USD analysis again. So that's the Euro USD analysis. So Euro USD analysis, in case you want to, so someone is asking, where do they buy? Okay, let me just do analysis on Euro USD for both selling and buying. Okay, so for Euro USD, where we are right now, as I said, very bullish. So we bounced off this key level that is at 109.66. Currently we are trading at 109.83, slightly below a key level of resistance. Okay, so price can break above that level of resistance, offering us a good opportunity to enter long, to enter into a buy trade if price moves above. So price can move above 38.2. That is what price? 109.84. Okay, price can move above 109.84. So moving above 109.84 resistance, then of course having a nice low risk entry, because we can have our stop loss at even 109.81. That is below this level of resistance. Below this level here, we can have a stop loss below there. We can have a target at 110 flat. That is the near-term target, and also longer-term target at 105. 110.51. Targets to the short side, to the sell side. If price declines, we have one at 109.67. That is 109.63. Sorry, 63. Yeah, 63, 64. Thereabouts. That's the near-term target, and the long-term target to the downside is at 109.45. Okay, so that's euro dollar for you. So can I hold gold for a week when I buy? Yes, you can, as well as hold it even for a month if you wish. It just depends with what your style of trading is. We all have different trading styles. Some of us are short term, some of us are long term. So you just have to determine what your style is. Okay, we have a number of questions again here. Are you supposed to do analysis only on one time frame? That is the one you decide to trade. Not necessarily. First of all, you need to just decide whether you are going to buy or sell, where the trends are. So you do multiple time frame, okay? Not just one time frame. Okay, where are you supposed to look for you to understand the recent trend of the market? You just look at price, okay? You just look at price, how price has been behaving. Has price generally gone up? And we also look at economic data. We do that kind of analysis to see what are market participants thinking. Where do you look for those news for someone to understand what currency pairs are doing? Thank you. And lastly, okay. So where do we find news? There are several news sources that you can use. Once you have our platform, for example, if you look at our platform, if you look at the trading platform here, we have news. We have different tabs here: trade, exposure, history, and news. Okay, so news. So this is all the news that you can look at, and analysis that you can go through, okay, and read and understand it, and helps you, come up with trading ideas or what to trade. So that's where you get all the analysis to understand the sentiment. And also where you get the news is the economic calendar. Okay, so we looked at that economic calendar. So the economic calendar, that's also where you get the news. Please, guys, we usually have these learning sessions on our trading, I'll say, classes, trainings. We usually learn how to use all that information, analyzing the news, price, sentiment, and all that. Okay, so again, so it's difficult to predict market direction without consolidation. Okay, what I would recommend, I'll say, sometimes predicting something is very, very impossible, because no one really knows what will happen in the future except from God. Okay, guys, it's only God who is sure of what is going to happen in the future. So if we have a consolidation, for example, this consolidation that we have on the dollar index, this consolidation that we have between, or even gold, let's look at gold. Yeah, gold has a very nice consolidation, which you can use as an example. Oh, where was it? Yeah, I can see. Yes, gold. So when you look at gold, okay, so rather than I predict, I can just wait to see, will price break up or will price break down? So the goal is to just be patient for me. The goal is just to be patient, because I cannot know for certain. So for example, here in the past, we had this consolidation here. Let me show you guys, between here and here. Oh, here, there. So we had this price consolidating between this point and that point. Came to this point, near here, came to this point. So when the price action was like that, I wouldn't exactly say it will break above here, it will break above. I'll just look at the economic data and see, does the economic data support a potential break above 2091? Does the economic data provide for a potential breakout below 1976? So my word, the word that I'm using here for me is potential. So price has the potential to break to the upside or to the downside, depending on supply and demand. Okay, when we say looking at the economic data and news, we are trying to analyze supply and demand. That is essentially what we are trying to do, to analyze supply and demand. So I would ask myself, so potentially, will there be demand that will push gold prices above 2091? Or weak demand pushing gold prices below 1976? So I just wait, then I see. So you see, I don't need to predict anything, okay? I just need to watch how the market is moving. I just need to follow the market. Just follow the market, okay? Just follow, do analysis, and then follow the market to see whether the market is confirming my analysis, okay? So the market is the master, Okay, the market is the master. Okay, so those are very good questions. Those are very, 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 very good questions. Let us end it at this point. We have taken much of the time, maybe 1 hour around. It has been under, it was supposed to be 30 minutes, but now it's been an hour. Appreciate. So all the best in your trading. Best of luck. I don't know. I feel like we should look at another currency pair. Let's see whether we can see. Well, yeah. Let's do GBP USD before we call it a session. Yes, GBP USD has been moving up. It was really in a downtrend. Okay, GBP USD was really in a downtrend, as you can see, but now price moved up away from that downtrend. And of this morning, if we look at this morning, how are things, what is the strength of currencies this morning? Let's see. I'm going to use, let me see, yes, come here, and then I use a tool. So all these tools here, traders, and then I'll use this one here, traders board. Anyway, I was talking about the British pound. Inflation in the United Kingdom has also moved up, and this boosted the trend of GBP USD. As you can see, the trend went up. The trend was down and then it went up. That was because of positive inflation report. Okay, so the trend is bullish. Okay, the trend is bullish in the near term. Okay, in the near term, the trend is bullish in the near term. Now, so let me just see some key levels here in this bullish near term trend. We had price coming in at this level of support at 38.2, bounced off that level of support, now trading at 128, around 120 there, the 128.73. So if I'm looking to go long GBP USD, those are the key levels that I will be focusing on. 128.33 right here, 128.33. Price might probably drop all the way to that level or continue just being strong. Let's see in the short term, near term, what is happening, because it can help us understand. Long term, bullish. Near term, short term. Okay, there's something I'm looking for. Yeah, yes, this is what I'm looking for. So this tells us the strength of currencies and weakness in the short term. So I can see for the British pound versus the dollar, you can see the pound has been strong against the dollar by 0.2%. The strength of the British pound against the United States dollar. The dollar is weak against the New Zealand dollar. Okay, that's where a very strong short-term trend is this morning. So the pound versus the USD. And if I look again at the currency, let's see this. Just bear with me here to do some fine analysis. So I hope, guys, you are taking notes. It's important for traders to journalize, to take notes so that you don't forget. Okay, so that you don't forget. Okay. So as of this morning, I can see, yes, the New Zealand dollar, you can see the New Zealand dollar is super bullish this morning. The dollar is quite bearish, followed by the Canadian dollar. So GBP, look at GBP. Look at the British pound. compared to the United States dollar, the British pound compared to the United States dollar, it's selling off slightly as of now, but overall it has a very bullish momentum. So it will be interesting to watch to see whether it will bounce off some key levels. So let's see that. So we have right here, this is the 30-minute time frame. Okay, so we can see where we are at the moment. The currency pair just encountered a little bit of resistance, and see how it will react at these levels. That is at 38.2 level, that is 128, 1.2852 and 1.2842. See how it will react at those key support levels today. Okay, today, maybe later on during the day, at around 12 or in the afternoon. Let's see how it will react to those key levels in the afternoon, 38.250 level, or if it decides to just go up, breaking above this resistance at 1.288, breaking above that key level of resistance, this level here. So if it breaks above, below that level provides a good place to have a stop loss. Okay, if it finds support at 23.82, for example, I mean 38.82 and 50, you know, below 38.82 provides a good area for a stop loss. 50.0, below 50.0, if price finds support there, provides a good area for a stop loss too. Okay, so we can have a near-term target here, and another one we can have it at this point here. So you can see how I am shifting between time frames. There is something I am looking for in order to have my targets. That's why I'm shifting between time frames. So there's someone who asked about time frames, but it's not easy. It's just something that you have to learn. It's not complicated. Okay, it's not complicated. Okay. Yeah, there we are with the British pound. Those are the near-term targets that we can look at. You can see how they look very nice on our 15-minute time frame. Right there on the 15-minute time frame, you can see. So either this price action breaks above this key level of resistance. Okay, if there is demand that will come in, find support at 23.6, break above this, if for me to be certain, or we just drag lower, finding support at 128.54 and 128.50 thereabouts, 54.50, 28.50. That's a nice round number right there, institutional level. It's around nice institutional level. 128.41 also around there, but 128.50, this should prove to be quite a strong level at 128.50. If price breaks below 128.50, that can be a signal that the British pound might really weaken. Okay, it might really weaken. Okay, so be on the lookout for that. Be on the lookout for that, and of course how the dollar is trading across the board. But fundamentally, when you look at the bigger picture view, as I said, inflation in the United Kingdom is high. Okay, ticked up, and this supports this bullish trend. It has been a weak bullish trend, but it has been it has been a bullish trend nevertheless, because we had a bearish trend. It's maybe possibly a reversal that is happening, a reversal of this sell-off. Okay, that's possibly what is maybe probably happening, a reversal of this sell-off. So it's important to take note of that. From an economic data perspective, there is underlying demand for the British pound compared to the United States dollar. That's the bigger picture view or long-term analysis of the British pound. Okay. New Zealand dollar, Kiwi dollar, because we see the Kiwi has been strong this morning. The dollar has been weak due to a dollar weakness. So dollar, where is it? Chart window here to see it. So sold off yesterday, found support, and was very strong as of this morning. The Kiwi dollar, you can see how it moved up this morning, quite a move up with the Kiwi USD. Potential support levels coming in at 0.6 flat. 0.60 flat potential support there, then final support at 0.59. okay, 0.59. Those will be key levels to watch. And I'm talking about those levels because they provide a good entry point where you can have a low risk entry. Okay, if prices break below 61, that is price breaks below 0.59, that will indicate, you know, super weakness of the New Zealand dollar. The New Zealand dollar will really be super weak, and the near term target to the downside will be at 59.77. Okay, let's see. Okay, so let's call it a session, guys. Please take note of those developments. We'll be doing this every morning. We'll be doing it also exclusively for guys who register prior. Let's engage, let's learn from each other, mentor each other, support each other, and trade the financial markets and have fun doing it. If there's any further questions, then I'm ready to receive your questions again. So good one, guys. Cheers, have a very good time, and be safe, manage your risk, and enjoy. Green pips to you all.